Good evening, and welcome to the latest episode of the Eve Prosper Market Show. I'm your host, Lockefox, and I'm here with all of this week's market news and the data from the latest economic report fresh off the presses. So, without further ado, let's start where we usually do, with some quick show news. I want to thank everybody who is tuned in live. We have a great audience today. It looks like almost 50 people between YouTube and Twitch. If you want to tune in live, we are live every Thursday night U.S. time. That's Friday night game time at 0400. We are live on Twitch and YouTube, and you can come join us. If you can't join us live, the show should be on YouTube ASAP as soon as we're done. And I got to thank Christopher for continuing to do some amazing edits. So we've brought back the edited show thanks to him. So throw some praise his way if you can. If you want to follow the show, all you got to remember is Eve Prosper. That'll get you to Twitch, Twitter, YouTube, and our blog. Our subscriber numbers are getting real close to 1,000 on Twitter, so I'd love to see that finally go over. Also, if you enjoy the show, if you want to support us directly, the very best way to do so is through our Patreon at patreon.com/EveProsper. Even $1 goes an extremely long way. It keeps us in hardware. It keeps this show ad-free, and it keeps us on the air every week. Our patrons really make this show possible, and if you can support us, it goes a very long way. We don't gate any content. It's just purely out of the goodness of your own heart. So I, again, have to thank all of our patrons every single time. If you can't support us directly, that is perfectly fine. Absolutely understandable. Please share us among all of your friends. I do like seeing the subscriber numbers tick up and to the right like any good economic guy would like to see. And then last note, before we move on, one piece of news that I think our audience will be very interested to hear about is that in the latest economic report, Quant mentioned that the CSM wants to remove the regional data from the regional resolution from the economic numbers. And I, for one, vehemently oppose that particular decision. It would actively hurt this show, and I think it loses resolution for the general public in favor of granting the big power blocks a sideways boost. So if you are not pleased about losing that data, if you would like to continue getting that data, which we've had for over a year, I would like to add, be sure to reach out to CCP Guard and CCP Quant on Twitter. Go see the Reddit thread. There is one that has blown up rather spectacularly, and let your voice be heard. And do bug your CSM. I have been bugging Fuzzy Steve all day about it, and it is a good chance to make sure your voice is heard, because this is unacceptable in my opinion. We're going to talk more about that in the post-show. If you're catching this on the edited YouTube, be sure to go check out the live show. I'll try to put links to it so you guys can go check that out. With that, let's move straight into the show. So we're going to start where we always do, with Plex, which is trending steady at 1.04. So we're going to have a lot more to say about Plex in the indexes part of the show. We're still seeing weakness in Plex, given the other a lot of the other indicators would let you say that Plex should be going up, and it should be going up strongly. We're going to talk about why we're not seeing that yet, but just as sort of a zoom in on that, part of it is the ISK velocity is staying relatively stable and actually pretty high, considering where 80% of the ISK that has been generated is getting spent, which is great news. It means there's a lot of demand on keeping the prices down, essentially, that's part of the forces tamping down growth. But this isn't the whole picture, but I didn't have time to put it all together in a one slide. We're going to get to it, I promise. I expect Plex to be higher than it is, but it's not there, and it's an interesting story, but we're going to come back to it. That's the spoiler here. Zooming in on the short term, again, we should see prices trending up now that we're under 1K units out there in the wild. But the upward pressure is extremely weak. Usually we see multiple percentage points, like 2 or 3 percentage points positive. And the fact that the resolution is squeezed down this far so that we can't seem to get to that 1.1 billion is rather telling, in my opinion. Zooming out on the rest of the RMT items, we see that skill extractors are continuing to demand a premium. They are a better way to cash in. So if you are looking to turn dollars into ISK, skill extractors are a much better choice. Okay, much is probably overstating. It's like 2 or 3% extra ISK if you're buying in $100 blocks. But why not optimize if you can optimize? It's interesting to see we were lockstep for a very long time, and now we're in pretty positive territory. I've been hearing anecdotal reports of a lot more vets coming to skill trading as a way to consolidate characters and perhaps liquidate old characters and move them into more focused new characters. So it's at least interesting there. We're not seeing those items hit the market, but it is driving skill extractor demand in that case. Looking at the skill trading market, the margins continue to be very strong. Not a whole lot to say here. I was expecting things to sort of narrow, but again, without Plex rising, it's really hard to drive the rest of this equation together. So it's still a great opportunity to be a skill trader at the moment. And right now, actually, with the slump in supply, this would actually sort of point towards a slightly higher price, maybe hitting the 650 mark over the weekend. But I don't think that we're going to see growth in this because I think they're reasonably locked to Plex prices going into the future. With that, let's get to the real meat of the show. With the economic numbers out this month, we should go look at the market indexes. First, we're going to start with the net trade numbers, which are a little interesting. The ship demand has been tracking down, and the mineral net trade has been staying even, which kind of goes counter to a lot of the statistics we'd be expecting. We know that mining and production are extremely productive at the moment. And yet, prices are either falling fast enough to meet new demand, which is a good chunk of that, or a lot of that supply is not coming to JITA. And I think that's the biggest piece of this picture. And that's what I think is so dangerous about losing that production and mining resolution, is that we can't count on JITA to be our single source of truth going forward. After 10 years of belly aching about it, we finally are in a case where nullsec is providing for nullsec and highsec is providing for highsec, and there's still some cross-pollination, but way less than we've seen in the past. And this requires us to think more globally in our assumptions and not just take a bad month's data at face value. And so this is, again, part of my push. Don't take away my data. Looking at the total destruction numbers, I wish I could tell you more, but we had a bit of a bug this week that knocked out a couple days worth of data. And we can go reconstitute it, but it's going to take some work to get it back. And it's probably going to be 2 weeks before I can patch over that blob. So this isn't real. Don't do that. But let it never be said that I won't show you guys the bugs. Next, moving on to the money supply graphs. January was extremely interesting in the economic report. Like, Ascension was a really good one, but this one is exceptional. So let me see if we might have to go in a weird order. So one, let's start with the sinks and faucets. If you guys have been watching for the last few months, you know that I really don't like the way the bounty prices are going lately. I think that pushes too much liquid cash into the market, and it can lead to an instability that would be extremely hard to correct for if market activity slumps, given a particularly active spring break, another game releasing, the summer doldrums. Like, with cash supplies being this strong, it leads to it puts more heat in the system. More heat in the system means that it's easier to run off the rails without a chance to fix it. So I think there's too much bounty money in the system, but you go look at the active ISK delta this month, and so active ISK delta is the measure of cash leaving the system that is between inactive accounts, which I need to go look up the numbers post Ascension, because inactive accounts isn't really a thing anymore post Alpha. And it's also banned money, money that has been removed from the system because of illicit activity. And though the faucets are higher than they've ever been, at 100 trillion ISK printed into the game last month, and the sinks are pretty strong at about 75 trillion ISK, which is a balance we usually see. I actually like to see it a little bit lower. Like, I'd like to see it under that 75 mark. But this active ISK delta, like the October numbers right here, that was I Want ISK getting banned, right? That was, 27 trillion ISK removed overnight because of the casino bans. This is almost double that. This is like, okay, it's not double. It's like 80% more. At something like 60 trillion ISK removed from the game. And so that, if we go back, we see that despite the fact that the fountains have never been stronger, cash supplies have been tracking down. And this is telling towards a Plex crunch. Usually we like to see this number going up and to the right relatively linearly. And we saw, over the summer, things got a little, were quiet. Once the fall kicked in, we saw us return to that exponential curve. We're breaking that curve again, and we're breaking it not with these big discontinuities from bans. We're seeing it leach out of the system, essentially. So either active ISK delta is at much higher resolution than we've seen previously, or the mining changes have finally come home to roost in a way that is sucking down some of this ISK, but I don't think the sinks are high enough to really account for that. But like this is extremely odd given the way everything is going. Like, everything else is pointing positive, and cash supply and Plex are down. That's strange. That's extremely strange. And if I were a betting man, actually, and I'd have to go double check in game, and I'd have to go see what the stop orders look like. This could spell a slide in Plex. Now, below 1 billion, probably not. I think there's enough supply and demand to keep it above 1 billion. But like, this is a really strange way to start the next month. And unless there's some great expansion news ahead of FanFest, which we should start seeing that sort of announcements coming down the pipe, we'll see. So this is strange. This has me flabbergasted. Next, moving into our production stats. Again, we can see that we're almost, okay, maybe not twice as productive as before, almost twice as productive. We saw a big bump with Citadels. That's to be expected. But ever since Ascension launching, we've seen production just take off like a rocket. And I think a very large chunk of this is going into supers. And this is, again, why the regional data matters, is that we need to be able to have the resolution to figure out who is building all of these supers. Like, I felt stupid back in October saying that we could be down to a 10 billion-esque super, a 15 billion-esque super, and a 80 billion-esque Titan, and could fall to even lower than that in the next, if this kept up for a year. And nullsec seems to be ready to produce every single frickin' rock into a super going forward, and making the capital engagement chain that much higher. And I don't hate this idea. I actually enjoy the fact that more supers would be dying. It becomes a much more banal circumstance to be engaging them and destroying them. I like seeing big things get exploded, and I think it's good for the economy. But that shouldn't be secret. You should be able to figure this out. And I think it's very hard to do that. To figure out where all of this product is coming from and where it is going. If we zoom in on the mining value, we see that Delve and Cobalt Edge are leading the pack, front of the class for mining value. Both 1 and 1. Even ahead of the Forge, which can do all of its mining in HiSec, Domain, and Lone Trek. These are extraordinarily productive, and there's a good chance that data is actually underreported thanks to the Rorqual bug that I still haven't heard has been resolved yet. If you are following the economic reports, you should know that, as it said in the previous thing, mining drones are not being counted because of a bug. I still haven't heard that report has been fixed. So this is extremely strange. Like, and I'm wondering, actually, I didn't get a chance to look. Wonder if, who is it? Providence is still extremely productive. These numbers are useful, and it's useful to tell you who is doing it and where it's going. So, for instance, mining in Providence, you could expect that a good chunk of that is coming out. It's going out to other pieces of the market. Yeah, a good chunk of it is probably going to capitals, but I'd say almost 50% of it is still hitting the market. Whereas in Delve, I'm pretty sure 90% of what's getting mined is going straight into production. And we zoom in, we can see why we think that is that if the Forge is at 34 trillion ISK in production value, Delve is at 20.5 trillion in production value. Now, the interesting piece here is that where Cobalt Edge was extremely productive mining-wise, they don't seem to be as productive production-wise, which is strange. I'd actually expect them to be using it all themselves. And I don't know if that's going into stockpiles, if that's actually coming out and coming to market. When we go zoom in on the industry pieces, I think we'll get a better look of that. But like Providence is only making 5.5 trillion in production, even though, again, that should be relatively productive as a more Careberry space, a more open space than a more controlled space of Delve. So I think these numbers are extremely valuable and important, and I don't think you should give them up just because a bunch of guys in nullsec think that you shouldn't have them. Next, moving on to minerals. we see that titanium is taking a tumble. I thought we were going to hold at 4.4, but we've fallen almost to 4.0. We're in extremely weak territory, and this is a case where I usually would bet on the RSI as a way to say it's fallen too far too fast. Like this dip down under 4.4 is something I would have bought in at, but I would have held and lost money given the way the patterns went. And we're in extremely weak territory going on here. And it's sort of in this really dangerous, could keep falling, we don't know where we're going, we're off the rails kind of spot if you're a technical analysis kind of guy. We see that once again, we see a big supply rush, and we've been seeing a big supply rush for the last 2 or 3 weeks. And this bump up to 30 billion, I don't think that can be sustained personally. I think that 25 billion units on the market is, an expected value. But that means that you're still going to bottom out at a 4.0. If you're looking to stockpile in the long term, if you have high sec work to do, trying to get a stop order under 4.0, something in a 395, might not be a bad idea. Get a decent, go grab some cheap trit while it's ready. But I would not invest in trit as a long-term investment. This is purely for my industrial bros. If you are going to use just truckloads of trit, get some stop buy orders in there, just so you can maybe save a few bucks on the production week to week. Next, moving on to pyrite, we continue to see weakness, but we're holding steady at 6.0. Less of a dire circumstance here, looking at the RSI on the bottom. Still extremely weak territory, but given the way the rest of minerals are going, I don't know how much credence I really give the technical analysis this week. We did see a big supply spike a few weeks ago, and it looks like we're rearing up for another one. So again, this would be a decent chance to put in some opportunistic buy orders, something in a 5.5, maybe a little under a 5.5, just trying to make some money between the 5.5 and the 6.0. It's risky. It's not a ton of money to be made, but I think that you could be in and out in a weekend and count your money. So I think this is a decent place to play a little bit of volatility as we dip down through the weekend and maybe rise up through the week as this bump smooths out. Mec Salon. Mec Salon has been our darling for the last few weeks, showing a little bit of weakness, under 75 at the moment, but staying strong. It's the one bright spot in the mineral picture at the moment. And you know what? If we're talking about hyperproduction, without the war drums beating, it's not a bad time to be stocking up. Again, I would be aiming for some opportunistic buy orders, something in a 65 to 68 sort of band. I think you're still going to be stuck holding this into May if you're looking for a longer hold, because I think what we're going to end up seeing is that all of that industrial might has to come to bear on something, and we might just be SOL until FanFest actually gives us something to fight over. But stocking up on Mec Salon and looking for some opportunistic buy orders to get in at 65, 68, maybe down at 60 if we slump a little bit in the next couple weeks. I think that the supply chain is on your side. We're still, even if it gets hot, it doesn't stay hot. We're still don't have a ton of this product handy. And I think it's a good volatility speculation vehicle in the medium term. Isagen continues to fall like a stone, and as I've said, just abandon all hope on Isagen. We're almost down to 50, it looks like, with no signs of stopping. It's interesting that we keep sliding despite the fact that supply chains aren't that much stronger week to week. We've seen some bumps up to the 800 million units mark, but I just don't think that there's just too much Isagen and not enough places to put it. I wish I could tell you where the floor of this was, because, again, same advice from Mec Salon is that I think it will track up once somebody starts kicking over somebody else's toys. But I can't tell you where the floor is, so I can't tell you where to buy in, and it's extremely risky. Like, we're looking at... I think that we could get all the way down to 40 if we're not careful in the upcoming weeks. It's really hard to chart this because there's just no hope here in the supply chain. So I would steer clear of Isagen. Noxian took a hit a couple of weeks ago, and we're down at 320, and we're looking to stay steady, which is good news. I expect this to be a little oversupplied from nullsec. Again, keeping an eye on the outputs of Providence and Cobalt Edge. The supply chains are rising, but they're not outrageous yet. Trends say that we're going to be down to 300, and I don't know when it's going to turn around. I think that we're just going to get down and stay down. I don't have a lot of hope that Noxian is coming back up without a mining rebalance or a recipe rebalance. Moving on, Zydrine, my favorite mineral to pick on, took a big nosedive yesterday down to 1050. And supply lines keep rising. Again, for those who might be new to the show, this is the kind of mineral you pay your miners with. It's where a lot of the ISK per hour comes from. And so you'll expect that a lot of this will be in oversupply, not so much from nullsec, because if you're a super producer, you basically control the mix of what you'll buy, effectively controlling just how much of everything that comes off the mining yield. But more so from casual renters and from Wormhole, I expect these to continue to grow. My volume target is something in a 200 million, and my buy target is sub 1K. And I wouldn't buy it so it's only buy if you need it. If you're going to use it, I would stock up at sub 1K. But I think that the sell order prices are going to come down to 1K in the next 2 weeks. If nothing else changes, unless somebody decides to swoop in and start manipulating the market. But there's a lot. It would be an expensive bet to be messing with, and it'd be a losing bet if you're not very careful. Megasite, I was expecting to have the same behavior as Zydrine, and we're not seeing it. Staying steady over 1500. It's a little interesting to see. It looks like we may have been in a slightly artificial slump where extra material was being bought out, leading to a price rise. But supplies are way back up at the 50 million mark. I think that the supplies need to rise a little bit higher to something in a 75, 60 million mark to really see strong downward pressure on this. But again, I'd be looking at my Wormhole guys and my renter guys to be overmining this stuff and slowly running it into the dirt. I don't know when that's exactly going to show up, just that I think that things are going to be weak. This isn't a spot where an intrepid marketeer could bump the price up a few ticks. Go play this by margin and slice out 20 million units and bump the price up. It's in a spot where you probably could do that, but it'd be super dangerous, and just please don't. You're going to end up holding a lot more than you'd like, and you're not going to make as much money as you'd hope. Actually, the place to do that would have been back here. So yeah. And then last, our last darling, Morphite, is staying steady at 10K. If we zoom in, same advice stays. We expect supplies to stay relatively steady. Macroxit is a relatively capped mineral, so that supply chain is relatively static, even with the numeral qual change. It's just that nobody's really going into Tech 2 because there's nothing to fight about. So sub 10K, I think, is a decent buy. I don't know when to sell. I just know that you'll be able to make a few bucks if you're buying some of these stop orders in the 9.5s and the 9.2s. You may have to hold it for 3 months, but I think you'll make your money back. Moving on to fuel. Yeah, anyway, there's a bug. I got to fix it. Prices are staying relatively steady. I think it's interesting that nitrogen continues to stay high. And again, it's that last hour's worth of resolution just goes off the edge there. And similarly, we have another bug here with the blocks and prices. I find it interesting that the build margin has shrunk and shrunk and shrunk, making it so that building blocks right now is a real losing opportunity. I'm not sure if we're oversupplied in blocks or if I'm not sure exactly what the consumption picture looks like post ascension, but it sure looks like we're oversupplied in blocks to the point where a lot of producers are eating their margin and not really making any money. So I don't know if this is a buy opportunity, because I still think that a lot of the ice products are overvalued. So it's a risky buy. You're basically hoping that people finally realize they're not making any money, and that's, well, this is the game where mined minerals are free, right? So I don't have a ton of faith in that happening. But if you're a block producer, I would stop the lines right now, and I'd stop, because you're just not making any money. Last in our fuel picture, we look at strontium. Supplies continue to stack up, saying that we're in peacetime. Nobody's really going to go fight. And heavy water is interesting, that we're so short at the moment. Looks like a lot of smaller gang operations might be going on to drive these out of the market, since those go into the space bards, boosting charges. Actually, prices are extremely high and supplies are extremely low. This is a very strange market, and I really should have been able to guess it, but I didn't expect this double dip. I don't like banking on double dips when it comes to these. We see a dip, I expect it to recover and stay steady. I wouldn't expect a triple dip. If we see a lot of twos, we see very rarely threes. In my opinion, like we see, two peaks here and then a fall. We see, two valleys here. Oh, they're going into Rourke walls. Thank you, Resident Bully. Billy. Sorry, Resident Billy is correcting me that these are going into Rourke walls. Panic buttons. Not panic buttons. They're boosts. They're going to the boosts. Which is interesting. It's going to hurt some of the margins, but I don't think the people mining it care. Moving on to our outlier analysis, we're going to start where we usually do in advanced materials. Things are staying relatively steady. We're seeing a couple of peaks again in the middle. Recovering nanotransistors is coming back down to the 2400 mark. I think that action is over. I'd be watching for an overcorrection. So if you're in a buy order mood, maybe play this over the weekend. Hypersynaptic fibers again is staying steady. Nothing to see here. Phenolic composites are way up, but I expect that to pop over the weekend. I actually expect a little bit of action in the fermionic condensates and ferrogel markets coming onto the weekend. Unfortunately, we're a little bit late here for this show to jump on this particular bandwagon. And I don't think that it's going to be sustained, but if you have some, if you're going to go look to get rid of it, if you wanted to go buy up some quick buy orders, for instance, might not be a bad place, especially fermionic condensates has a big buy delta at the moment. The reason is that dysprosium is peaking. Oops, sorry. And we're seeing the supplies dip a little bit. We see this pattern relatively regularly. Just looking back a month ago, we saw a similar dip, and I should expect oversupply to be coming back. So I expect this bulge to evaporate in the next 2 weeks. Because again, everybody is productive, everyone is doing their part industrially, but there's not enough Tech 2 to really slurp up, to really add the extra volatility on the buy side of the equation. The supply side of the equation is rippling, but it has nowhere to ripple into. So we're not going to see a harmonic dissonance going on. Looking at PI4s, things are looking a little bleak in broadcast nodes and recursive computing modules. Looks like a lot of the expected extra, I don't think that the Citadels and ECs are dying at the rate people were expecting. And it looks like producers are still ready to generate a lot of these things. Now, it might be a decent chance to stock up if we're expecting the same pattern we've seen in the last year to keep on. It would behoove you to perhaps watch this market to sell in May and June, seeing as we should expect the next round of structures to come out. And if I'm not mistaken, and feel free to correct me, this is me wildly speculating, the next round of structures should be mining ones. And though I don't expect the impact to be as big as the last two, seeing as I expect mining equipment to be cheap, I do expect it to be destroyed relatively quickly, which would mean a lot more baseload demand. What does that mean as a speculator? I would still hold off buying in. I would maybe put some really enthusiastic buy orders in to try and sneak in something really cheap, like some really low stop orders you can just set and forget. Something that's like 15% under or 10% under the current buy order price. And wait for dev blogs to come up, and that's the way I would play this gamble. Is that I think that we'll oversupply until we know what they're going into, and then everyone will jump on the dev blog because they've seen the pattern twice, so it's not a surprise anymore. But you will have collected a bunch of super cheap buy orders over the course of like 3 months, and you'll get to laugh all the way to the bank while everyone's trying to make money after the fact. That's the play I would make here. It's risky, but I don't think you'll lose much money. It just means you're going to have to put a decent amount up in escrow to be holding in reserve for these opportunistic buy orders to happen. Next, elite drone AIs, which are a critical component in the new mining drones, is tracking back up again. We're seeing supplies get tight. There's been a lot of consternation about learning to fly your Rorqual correctly and using your panic button correctly so that you don't lose your Rorqual like a scrub. And it looks like a bunch of people might be adding miners into their mining into their ISK making apparatus, and driving the prices up, driving demand up in the short term. I don't think this will stick for very long. Like, I think this might be a trend for February. We'll get up to maybe 10 million on these things and then start tracking back down again. Because I think once we reach a saturation point, the replacement rate for the mining drones is going to be so low that this is going to go back into oversupply. But I mean, there's a quick buck to be made now, and if you got on an 8 million buy order to sell at 10 million, you'd be making a decent buck. So it's a gamble. I don't think it's a great one. I think it's a little bit too late to jump on this party, but I'd be watching the elite drones over the next month. Next, bad news for your Tech 3 producers. Methanofullerene is in the dumps, and the reason is that nobody's really flying T3s at the moment. We're seeing a lot of T1 action. We're seeing a lot of Pirate faction in the meta. We're just not seeing a lot of T3. And I think that there's just a swath of oversupply at the moment, and it'd behoove you to maybe stop producing it for a couple of weeks as the market recovers. I think we'll be back to it reasonably quickly. For the doomsaying I might be saying, I still think that the margins on T3 are healthy enough. I think this is just a symptom of somebody dumping way too much and not knowing what they're doing. And then last segment of the show, we're going to start with a whoops from last week. Seems that I have a bug in my system that I totally missed. Leopards spiked big time. These are if you don't know what a Leopard is, it's a special edition shuttle that warps super fast. They tend to be about 100 million-esque. They've been around forever, for 4 or 5 years now, and they tend to ebb and flow like a lot of the special edition assets like that. But DeLone Wolf featured it on one of his shows last week or the week before, and what should happen is that when this sort of thing happens, I have tools that are very good at picking this out. This should have just been a slam dunk. We would have talked about it on last week's show. Like this is what the tools do, is they look for exactly this kind of pattern. This is easy. But I have a bug, and I haven't been collecting Leopard data since October. So that's on me. I am bad. GG DeLone Wolf. Help me find a bug. Haven't had a chance to fix it yet. Been super busy. IRL job is hard. I've just been so damn busy. So I know how to fix it. I just need to go friggin' do it. Next, the one we picked up a couple of weeks ago was the Hyena. And so I wanted to go ahead and reiterate the pattern I expected to see, because turns out I'm right. What we see is that we get a spike. So this is I like this pattern in some of the low volume Tech 2 producibles, I guess is the way to put it. And so you'll see this in Marauders, you'll see this in Black Ops, you'll see it in Hictors, you'll see it in the electronic attack frigates, all of these sort of like niche, useful, but not very popular kind of ships. This is where you'll see this pattern. It doesn't happen on the bigger ships because there's enough heat in the market. There's enough activity that the ebbs and flows move more organically. But what happens here is that the margin sucks, the margin sucks, the margin sucks, the margin sucks. This is your baseline. If you're watching all of the Tech 2 market, you're like, hyenas suck. Then somebody buys out a whole bunch of these, and the supply crashes in the market, and the price spikes. And then a whole bunch of producers go to their spreadsheet and go, wow, look at hyenas. I could be making 25, 30% on hyenas. Let me go just churn out a whole bunch of those. I'll go to market. It'll be great. And then the price spikes back down again from all of these producers coming to market. What then happens is that it tends to overcorrect, because a lot of these guys are like, shit, that was stupid. I'm not making any money on this. Why did I do that? That was so stupid. I am so stupid. And what we end up seeing is that, so what usually happens is this overcorrects earlier. I expect this crossover point to be a lot earlier than it happened. And we see a bunch of people go, God, just make it go away, and they crash their own prices. They crash their own margins just to get out of it. Just get these things off my frickin' thing. They are killing me right now. And then this means that as a trader, you have an opportunity, because these are under margin. And now you have a chance to buy in and ride it into the 21 million reset at 18 million, 15 million on a buy order. This is easy margin for you. Now, as a producer, I think you're just shit out of luck. Like this is why for producers, I tell you to tread very carefully in low volume markets, because this is exactly what happens, is that you come with more supply than you really should have, and it takes forever to get your cash back out, and you're screwed as a producer. So that's the warning. For the traders, this is an opportunity to watch for this behavior right here in your low volume Tech 2 and wait for the overcorrection underneath this baseline, 21 million. Because this will rebound relatively quickly, and you can just get out at the normal price. I wouldn't advocate holding a long-term period looking for another one of these, because these are really random. This is an extremely unsteady sort of collapse going on. And if you can make money on it, like, absolutely, like, triple your margin, why not? Sign me up. But I can't ever tell you when one of these is going to show up. So you could just be sitting on your lottery ticket for 4 months waiting for this to come out, and it only lasts a weekend, and you're up camping somewhere, and you completely missed this party, and you've been sitting on your money for too long, and you can't make anything back. So I would be buying in now and selling later. Now, again, since there's 50 people here in the show, and there's probably 100 more who will watch the recording, don't everybody buy in on this right now. You're just going to screw it up. I'm trying to show you a pattern. I'm not trying to tell you to buy hyenas now. Please don't, because you're going to get burned. What I'm trying to tell you is watch the Hictor market, the Black Ops market, the Marauder market, the EAF market, and look for this pattern. Because this pattern, I think you can take to the bank, and you can make, you can turn around 4 or 5 units and be sitting pretty on your free margin. Last but not least, let's go into the violence report. We're a little behind schedule because I have just taken way too long to rant. Do please note that some of our Z Killboard numbers are screwed up for the week. So the magnitudes might be wrong, but I at least believe in the rankings. Good to see the Macarial back in the mix, but still extremely weak. Astero is still strong. Gila, Ishtar, and Proteus still very popular. Solar systems, again, this is probably screwed up. Auga, still popular. 9-4 and 7RM are taking the backseat of our top 5. Hematar, this I don't believe. Like, Hematar has never been in the top 5. So this, I think, is just the bug. Like I said, from the first on, we've got a problem. So I believe the ship numbers. I don't believe anything else. And with that, we're going to go ahead and end the show here. I want to thank everybody who tuned in live. It was a great turnout this week. Looks like we got a little over 60. Geez, good, really, really popular show this week. If you want to follow the show, all you got to remember is Eve Prosper. That'll get you to Twitch, Twitter, YouTube, and our blog. Do tune in every week at 0400 Friday night. That's Thursday night U.S. time. We're here every week. And if you want to support the show, the very best way to do so is through our Patreon at patreon.com/Eve Prosper. That keeps it ad-free. It keeps us on the air. It keeps us in equipment and licenses and all of the stuff that makes this show run is thanks to our patrons. We don't gate any content, but even $1 goes an extremely long way, and I can never say thank you enough. If you can't contribute monetarily, that is perfectly fine. I completely understand. Do share this with all of your friends. I do like seeing subscriber numbers go up and to the right like a good market maker. And do reach out among your CCP contacts and your CSM friends, and protest the changes to the economic report. I very much don't like them, and we're going to talk about that in the post show. If you're watching this on YouTube and you are missing this is the end of the show and you're watching the edit, there should be a link down in the doobly-doo to come see the full post show with links to when it starts and when the rant really begins. With that, I'm going to end the show here. I've been your host, Lockefox. This has been the Eve Prosper Show. We will be back next week with all of the market news you need to make money. So fly safe, and I will see you all next week.